Welcome back, it's me Adam and you are watching Unlimited Options Investing. In this video, we're going to be talking about something completely off the board that we haven't talked about before, although it does pertain to economics and finance. Specifically, it's going to be real estate. And an article I saw on Yahoo Finance, which actually surprised me a bit, but I guess the data is a little bit behind for what we may potentially see could be a peaking of prices in the real estate market. This article is called Home Prices Surge to Another Record High in April. And since this article was published, mortgage rates have gone through the roof. It's been pretty ugly out there with rising interest rates. So we'll see what comes after the April numbers. But again, before we get into the video, if you're new to the channel, welcome aboard. Hit that subscribe button, smash that like button, and check out my description below for links to my Instagram, my Twitter, and my TikTok. Alrighty, so U.S. home prices climbed to another record high in April as inflation continued to run hot across the housing market in the spring. The latest S&P CoreLogic Case-Shiller Index released Tuesday put the annual increase on the cost of a home at 20.4% in April. That's massive. Down slightly from the prior month's upward revised jump of 20.6%. And this is just real estate. The most steady and the biggest asset class by far in the world is up 20.4%. Are we in a bubble? We're going to have to see. So the pace of increases slowed marginally for the first time since November, in a potential sign home prices may be beginning to cool, but many cities across the country continue to see prices soar at a quickened pace. April 2022 showed initial, although inconsistent, signs of a deceleration in the growth rate of the U.S. home prices. Craig Lazzara, managing director of S&P DJI, said in a statement, I guess Dow Jones Index probably, said in a statement, "We continue to observe very broad strength in the housing market as all 20 cities notched double-digit price increases for the 12 months ended in April. April's price increase ranked in the top quintile of historical experience for every city and in the top decile for 19 of them. Cities that saw the biggest price accelerations were Tampa, Miami, and Phoenix, with year-over-year home prices gains of 35.8%, 33.3%, and 31.3% respectively." And just a side note, if I could choose one place to live and I could afford it and I could actually go there, it would be Tampa. It looks absolutely beautiful, but that's neither here nor there. Moreover, the S&P CoreLogic Case-Shiller 10-City Composite registered an annual increase of 19.7%, climbing from 19.5% in March. The 20-city composite saw an annual gain of 21.2% compared to 21.1% during the prior month. So looking at this graph of the U.S. home price growth over the past 20 years, again we see the bubble in 2008 when it popped because of the mortgage crisis and the banks almost going under, and then a little bit of sideways action, and then a growth over the past decade or so, and then a huge acceleration in growth over the past couple of years since the pandemic had hit. Meanwhile, the Federal Housing Finance Agency House Price Index showed month-over-month price growth at 1.6% in April. The figure came in marginally higher than the 1.4% rise economists surveyed by Bloomberg had projected, and was up from last month's read of 1.5%. Over the prior year, FHFA data showed home prices rising 18.8% in April. Further weighing on the affordability of home ownership was a jump in the cost of financing a house as the Federal Reserve raises borrowing costs to slow surging inflation. Last week, the rate on the 30-year fixed mortgage increased to 5.81%, according to Freddie Mac, the highest level since November of 2008, and what happened back then, and more than 2.5 percentage points higher since the start of the year. And I remember it was even above 6% just a week and a half ago. Last week, the rate on the 30-year fixed mortgage increased to 5.81%, according to Freddie Mac, the highest level since November of 2008, and more than 2.5 percentage points higher since the start of the year. And I remember even like a week or 2 weeks ago, it was above 6%. April's data on home prices also predates the U.S. Central Bank's latest 75 basis point rate hike. The recent surge in mortgages rates to 6%, however, has led to some weakening in the housing market, with Powell deeming current financial conditions a reset for the housing market in a recent press conference. We noted last month that the mortgage financing has become more expensive as the Federal Reserve ratchets up interest rates, a process that had only just begun when April data were gathered, A more challenging macroeconomic environment may not support extraordinary home price growth for much longer, Lazara said. Still, the median list price for the U.S. home was $447,000 in May, up 18% from the same time period last year, according to data from Realtor.com. And check out this tweet. So in January 2021, the 30-year mortgage rate was 2.65%, and the average new home price in the U.S. was $401,700. Today, the 30-year mortgage rate is 5.81%, and the average new home price is $570,300. Assuming a 20% down payment, that's a 107% increase in the monthly payment from about $1,294 a month to $2,679 a month. So really, who are the buyers in this housing market? And I'm not going to go through this entire article, but rents nationwide increase at record level rates. And honestly, people are getting priced out of housing, out of just everyday necessities, food to food. Inflation has just gone wild. It's been a really tough time. And again, there's no wonder why everyone's calling for a recession. The fact that we may be in one right now. And as it says here from Jimmy McMillan, slogan for his New York mayoral run, the rent is too damn high. The median monthly rent in May hit $1,849, a 26.6% increase since 2009 before the pandemic. Holy smokes. And there's all this talk about rent relief and people not having to pay their landlords right away. And who are feeling those effects? The landlords themselves. And it's just a disaster. When will they get their money? When will the renters pay their fair share? It's a tough situation. And where you live will determine the amount of your rent hike. In Miami, rent increases are averaging 40.8%. Wow. With Orlando seeing increases of 25.8% and Phoenix 17.8%. New Yorkers are complaining about 40% rent increases, with the average rent on a non-subsidized apartment in May $4,975 a month, 22% from last year. It's crazy, guys. But actually, if you even take a look at my Instagram, which you can easily find in the links in the description below, and you look at this picture over here, you see Canada is like no other country. Just the real estate prices have gone absolutely berserk, and it's not just a phenomenon from the pandemic. It's always really been leading the way ever since the Great Recession after 2008. So crazy times we're living through. Let me know, guys, your thoughts on the real estate market. Do you think it's just going to pop like a bubble? Do you think things are going to stabilize? After a certain amount, it goes down. How much will it go down? What's happening? Let me know in the comments below. Subscribe, like the video, check out the descriptions for my links to Instagram, Twitter, and TikTok, and I will see you in my next video.